Let's start like this. Boom. First, we're going to start at the top of the watch list. We're going to look at CAD JPY and CHF JPY. These are two D2 setups that presented early this morning. This is before I was awake. I actually slept in a little bit today because I was up so early yesterday. I didn't take a nap. I pushed through, had some caffeine, and then ended up just going to bed early last night and just had to catch up on some sleep. So I wasn't up for the 4:30 a.m. breakouts here, but I know some of the guys in the group did take advantage of this. I think Austin Mendoza was in one of these trades. Some of the guys in the group were doing well. And if you don't already know Austin, he's always in the group chat. If you're in ASFX, he's always in our Discord. He's got a new Instagram account. Definitely go follow that. I think it's Doza_FX. I repost his stuff sometimes. So if you follow me, you'll see it. So first, I guess we'll talk about the divergence here. So let's throw it into replay mode. That'll make it a little bit easier to see. Now, the entry is very clearly marked. This is part of what we've back tested to build the D2 system. So we're looking specifically for bearish divergence in this situation where the RSI here at its high is at a higher point than price action at a later time. So because price comes higher here, but the RSI does not, that gives us a falling RSI, rising price action, that's bearish divergence. Once we have that bearish divergence set in, we're looking really to the 50 EMA, which is that light blue line right here. And we're looking to see if that's being broken, being compromised. Because if that's being compromised, in our minds, that's a change of bias. Where the 8 and 21 moving averages, the yellow and red line, they're more short term. So they aren't as you can have a short-term cross down but still end up higher by the end of the day is what I'm trying to say. But when you start to break the 50 EMA, you're starting to change the whole direction of this thing for the entire day. That's what our testing tells us here using a 15-minute chart. So as it breaks the 50 EMA here, we know where the stop loss would be because we also have our 8 and 21 cross. So it kind of is like an A1 here, but market sentiment is very bullish. You can see the TDI is well into the buy zone today. So that doesn't feed the short ideas. But with that strong body through the 50, you could be looking for shorts there, stop at the open price of that candle. And as you can see, as that falls, it really just holds the 8 EMA nicely for you. And it falls about 3R so far, 43 pips to the downside with a 13 pip stop. That's a nice one. The thing that I don't really like about this, to be honest, is the EMAs. I don't love trading. If we were to go short here, I wouldn't love it going towards the 800 or towards the 200 because I know it could use those two levels as support with this bullish market sentiment line and come higher and retest that divergence line. So I'm not a big fan of this one. I do like CHF JPY a little bit better, and you'll see why. There's just more space to the EMAs. So we have the same bearish divergence on top. We start to get the 50 EMA breaks here at about 145 as we finish up with the Asian session and move into the London session. So as that finishes up, we start to move lower. Again, your 8 and 21 EMAs are crossed down there. If you read my notes, I really did like that about this one. And here you get this nice little two candle formation right off the 21, gives you a stop loss because you know how to read that candle formation if you're in ASFX. And it just is looking to ride that 8 EMA. That's the idea with this move. Now, your risk reward is only 1R to the 200, but that risk reward, even only being 1R, is still better than if you were to go short here looking for risk reward to the 800. That's only 0.3R. So that's why I preferred CHF JPY because they're the same signal, the same idea. You're shorting quote JPY, but the risk reward here to me is better. So it bodies the 200, which is this white line. It bodies that here, which is a good sign that it will move lower today. And it does have to pull itself back though. But even in that pullback, it doesn't touch the 21. Barely touches the 21. It still holds the downshift. You should still have a piece in if you can. Now, you might get stopped in profit there. You might catch that first pop and you might be done with it. And that just might be the way it is. That's 3R. That's a great trade. Be done with it and then move on. You don't need this full little extra piece to the bottom towards the 800 down here. You don't need that. So these were the two D2 setups that I first saw this morning. I know a lot of the guys were trading it, and I'm glad that they were able to take advantage of this because I think that divergence, especially here, is very, very strong. So does anyone have any questions about how this entry signal is taken? And again, this is what we teach in the advanced course. It's part of the starter pack. This is the D2 entry signal. It's kind of like a D1, but it's more of a reversal trade. It's really, really powerful for people who are contrarian biased. They tend to be contrarian in their trading.